Ignition sequence starts. 6, 5, 4, 3, 2, 1, 0. Liftoff. We have a liftoff.
Hey everybody, this is the Digital Asset Investor, and I want to remind you, my sponsor Link2, they've just launched a streamlined onboarding process that takes just a few minutes, giving all investors instant access to invest on the platform. Visit link2.com or download the app now. This is for U.S. investors. Go check it out. I'm an investor on Link2, and they are my sponsor. Okay. Look, the block bull is being very aggressive this morning. $4 isn't out of the question within 3 weeks. Once Ripple pays off the $125 million fine, XRP will hit a minimum of $27 in 2025, and it's highly likely 3 digits could well be obtainable with the 10.8 trillion Nostro-Vostro accounts valuing XRP somewhere between $190 and $250 a token. Sounds interesting to me. Now, this is very interesting. We've seen the stuff on the Bitcoin as a strategic reserve asset. Well, I want you to watch this. Don't think about Bitcoin. Think about XRP while you watch it. It's an interesting video.
What does it mean for the United States to have a strategic Bitcoin reserve? How would this impact the financial position of the country? And how would it affect Bitcoin? Let's take a step back and explain what a strategic reserve is and why Bitcoin is an interesting reserve asset. A strategic reserve is when a government or business stockpiles specific materials to help when unexpected events arise. Examples of strategic reserves are food, water, oil, metals, minerals, medication, and now Bitcoin. If a government holds onto a surplus in food and water, it can help the population in times of natural disasters or war. So why would a government want to hold Bitcoin? What strategic benefits could be gained from that? Let's take the example of the United States to explain. The U.S. national debt is over $35 trillion today. Last year, over $1 trillion in taxpayer money went towards paying off just the interest on this debt. Anything that can help the U.S. pay off its debt strengthens the financial position of the country. One way to strengthen your position is by holding assets that increase in value over time. If this happens faster than new money is being printed, then it could help a country pay off a larger amount of debt in the future. The orange line represents how Bitcoin has grown by an average of over 60% per year for the past 10 years. Bitcoin's value grows so fast because it has a limited supply of 21 million, making it more scarce than gold, currencies, and other stores of value. This supply can't be changed. You would have to convince the vast...
What would happen if you had a digital asset that was growing because of the scarcity, but also started being used for payments, and then grew even more because of the utility? It would serve as a better strategic asset for the United States.
Majority of the network participants that the Bitcoin they hold will become worth less, and they won't agree to that. Many people have tried to create copies of Bitcoin, but these never got close to having the same network effects. One country that already has a strategic Bitcoin reserve is El Salvador.
I would disagree. Tell the world that all of these digital assets are commodities. Give them the same free regulatory pass that Bitcoin got, and watch what happens. The money will flow to the better technologies.
Holds around 5,800 Bitcoin, worth around $340 million, and has made a profit of 38%, or around $50 million so far. The United States already owns 213,246 Bitcoin today, more than any other country, by confiscating it from the Silk Road marketplace and funds stolen from the exchange Bitfinex. If the U.S. could obtain 5% of all the Bitcoin supply, for example, this could help to pay off a significant portion of the national debt. If more countries create a strategic Bitcoin reserve, the price is impacted more. So being among the first countries to adopt it can be a great strategic move to increase your wealth relative to other countries. It forces all countries to consider this decision or risk being left behind. Bitcoin and all of its individual holders also benefit from this adoption, as owning and using it will keep getting easier over time.
Okay, I thought that was an interesting little commercial. This is interesting too. This is something I said years ago, because this is kind of how I got here. I was a financial advisor at Morgan Stanley back in the day. I'm not now, but that was what I always thought this, in the early stages, that's what I always thought this digital asset space was a new asset class where all of the financial advisors, all the finance people across the world would invest anywhere from 1 to 5% into this new asset class. Well, I think it is that, but now I think it's even bigger. Now I think that they're going to tokenize all the other asset classes. So this is going to be the asset class to swallow all other asset classes.
Now, if you actually think it's undervalued by that extent?
This is from back in 2019, but now it's starting to come into reality.
You know, we think the best approach for most people is just to put 1% or 2%.
Are you saying that? I get that if you're somebody who's got a lot of assets. I still think it's crazy, but for a retail investor, somebody who's saving for retirement and putting that aside, that seems crazy to me.
Well, it's basically the idea that, you can afford to lose 1% if that's 1% of your portfolio.
That's crazy. You might as well throw it away on high fees to an investor, to an average. Like this, you're taking a flyer on that. You don't know where it's going to go or what's going to happen.
Well, in a way, that's right, Becky. That for the majority of people, it's 1% is like a small risk bet. But Bitcoin makes all of its gains in 10 days in a year. I think this is an example that if you exclude the 10 best days, Bitcoin loses 25% a year. So you gotta essentially hold it or hodl it, as they say.
Okay, we get the picture. Now, this is what I want you, and I kind of made this comment in the last thing. So you got Bitcoin, this thing you can invest in that's got scarcity. Then you got these other things like XRP that you can invest in and they have scarcity. Difference is they're less expensive to send the money. They scale. You can send them fast. You have benefits that Bitcoin does not have. But you can also tokenize things on the XRP ledger, which would put the liquidity of each thing you tokenize very close to XRP, a lot closer to XRP than it would be to Bitcoin. So over time, when you start tokenizing the world, you can easily see how most of the liquidity will be closer to the digital assets where the tokenization is happening, right? Making XRP a preferred digital asset.
Every stock, every bond, every currency, every commodity, every piece of art, every bottle of fine wine, every collectible car, every piece of real estate, every private business, everything of value in the world will eventually be a token. This adoption of technology, this evolution, it's not a revolution, it's an evolution of technology, that everything of value will be a token on a blockchain. Not a coin, not a thing. It's literally a line item on a public ledger. Everything of value will be that. And every transaction of value will happen in digital assets. You don't need the pieces of paper. Wipe out all of DTCC, which processes $1.8 quadrillion a year. That is a large number. That will all move to digital. DTCC. And when it does, it will create massive wealth, the greatest wealth creation opportunity I'm going to see in my lifetime.
You got that right. That is the fact, Jack. Look, Jay Clayton is weighing in on things. Listen to this.
Here's what I think the right message is and why.
Same Jay Clayton that through regulatory capture stopped Ripple for all these years.
Expect that the Trump message is going to be more appealing when you look at it closely, which is, where does growth come from? Growth can come from a couple of things. Energy. If we have lower energy costs, that's going to reduce the impact on consumers. It's also going to foster growth. If we continue to be tech leaders, when we're tech leaders, we get the benefit of growth around the globe. We only have 360 million people. There's 8 billion people in the world. When they get hooked in to a digital economy, we all benefit greatly. Capital allocation. We're better at allocating capital than anybody else in the world. 4% of the world population, we allocate over 50% of the world's capital. Focus on those things and competence in government. That's how you get real growth. That's how you get real wage growth for the people in the middle 80% of the economy. Yeah. This idea that you're going to go out and sort of say some prices are good and some prices are bad. Right. It's lunacy.
But kind of like the lunacy of saying some digital assets, just because you happen to be buddies with the venture capitalists behind them, some digital assets like Ethereum get a free pass when XRP gets sued. Kind of like that, Jay. All right, this is a great reminder right here, right now. There's a lot going on the X platform. They are imminently about to initiate payments and all kinds of new features where people can make tons of money and where it can be everything, the everything app. Well, Digital Perspective says, remember this? I did mention I am a one issue voter, didn't I? What this is anybody else happen to notice that the President of the United States uses the XRP tip bot? This was from back in 2018-19. Yes, you could tip on X, and it was only XRP, folks. And everybody acts like that didn't happen now. Now, you got to hear, I want you to hear part of this clip right here. This is Max Kaiser talking to Alex Jones, and they talk about the bail-ins and what's coming.
Floating. And so the market's bounced. But I think we're at the very last inning of this 30-year global debt Ponzi scheme based on the Japanese yen carry trade. We made a film about it for Al Jazeera, 15 years ago about the yen carry trade. So this has been building in the system now for 15, 20 years. And like any system where it becomes ultimately overly leveraged, it gets to a point where you have systemic collapse. And so the 2008 collapse, which was enormous, this is now going to be the 2024, 2025 collapse, which would be much bigger because it'll be...
No, I totally agree. So let me ask you this. How is the establishment going to respond versus how we should respond? Because we have the FDIC report video last year where they said bail-ins are coming. We'll play that clip. Yeah. I mean, clearly they want to create a unified ledger, make everybody give up their assets, put it in a big pool. You'll own nothing. You'll be happy. That's their plan. In fact, let's play that FDIC
unified
clip. Here it is.
Ledger.
Okay.
There are some market tests of whether you're being heard. And I think about TLAC. So TLAC should respond to good and bad news about the institutions, and it's really important. I mean, it's a little bit conflicted, right? I mean, it's important that people understand they can be bailed in, but you don't want a huge run on the institution. But they're going to be. And it could be an early warning signal to the FDIC and the primary regulators when these things happen. And there may be some other prices. This is similar to what Jay was saying in the market, that you can tell whether people understand who's going to be protected, who isn't going to be protected. It would be, I think, an interesting study to look at the evolution of market prices in a situation like March of 2020, for example, and see whether people understood what might happen.
So we're coming to the end of this bubble. Max Kaiser, what will the establishment do versus what we should do?
Well, bail-ins are something that have been talked about for a while, since Cyprus, the bail-in around the 2007, 2008 era, I believe, during that last crisis. But I think since then we've had the central bank digital currency, or the CBDC, has really matured, and that becomes an option. And so where we're heading, I would look at what's happening in the UK right now, the United Kingdom. The United Kingdom is becoming
Okay, you get the point. A lot of interesting things happening. Now, in DAI XRP, we're going to talk about DAIXRP.com. We're going to talk about, there's a guy that's predicting a cataclysmic, did I say that right? Cataclysmic implosion in Washington, D.C. in November. And I want you to see this clip. I'm the digital asset investor. I'm not an investment advisor. This is for entertainment purposes only. Please subscribe, hit the like button, tell your friends and family. A cataclysmic implosion in D.C. And it's the good kind. Here we go.